What's good, everybody? Today is August 25th. We're about to do a simple No News Monday trade recap, and I'm going to show you guys everything that I thought looking at the charts today, and I'm going to show you guys why today was a horrible day to trade. So if you made money today, good job, but please look back at your trades and tell me if you think they were high quality or not. So without further ado, let's just hop straight in. Boys, oh boys, we got some new chart colors, all right? So let's just start, and I'll show you guys exactly what I'm thinking at every point during the chart, right? So first of all, looking out on the higher time frame, let's start with that top down. 4 hour tells us we are overall bullish because if you look, we've been trending bullish, and then right about on Friday we made this huge candle wick to these highs, right? So now we're looking like we're definitely going to be bullish to this bigger time frame buy side level up here, right? Let me just pull that out, and then over here, buy side up here. So now if we look, we're expecting to see this get taken, right? So this is our bigger time frame draw, right? So now what I'm expecting to trade throughout the day is a little bit, because we opened the market right about here, right? So what I'm expecting to trade is a retracement into this big fair value gap, and then a potential take of this high, and then we'll look to see this is our external draw, right? That becomes the zone where we can expect to see a market maker model play out. So let me just draw the curve to show you guys exactly what I'm talking about. We can expect to see this market maker model play out from here to here, right? When I see this big wick coming, and keep in mind this was Friday, right? This was Powell speaking, right? And all of a sudden the market just pumps it in nowhere, because at this point we're looking bearish, right? Until Powell speaks and we just see this huge up candle. From there the market literally does nothing until it opens on Sunday, does a whole lot more nothing until open, when we see a tiny bit of action, right? So looking at the market, what this does for me, the second I see this big candle get open, there's two things in my brain, right? First, this creates a huge range for us, right? And with a range, there's a couple different possibilities, right? So we have from the bottom of that candle, so I'll quickly draw this out, from this low up until wherever we start to see some price relief, so I'd draw it to this high, right? So from here, this range tells us a couple things. Number one, we have a fair value gap in this range. Number two, we have equilibrium of the range. We have OTE of the range. We have whatever we want to split it into quadrants, thirds, like however you like to trade ICT. You can do that with this new beautiful range that gets open. The second thing is, if we see one side of this news range get swept, we can expect to take the other side, potentially take some kind of reversal trade, maybe back to equilibrium of the range, or back to take some kind of internal low or high or whatever, or even from one side of the range all the way to the other side of the range. So opening the market, we have the possibility to retrace to equilibrium, but we don't have the possibility to go take the side, because if we look, we open right here at 9:30. We're nowhere near tapping back in all the way down to this order flow, or tapping all the way back down to this low, right? So I'm expecting to see this fair value gap hold, and I'm expecting to look for longs throughout the day, because now if we look, this is a textbook market maker model. We have range, right? We have fair value gap. We have generated liquidity all throughout this leg, right? We're now expecting to see a change in the state, displacement, pull back in a go, right? That looks super clean. And if you look, that's exactly what happens here on NQ, except we never end up taking that high, right? So we're about to run through all of this, kind of what happened and all that, right? So going into open, we ended up placing in a little bit of a clean internal 1 minute model, right? So quickly zooming down, right? 1 minute, we see price right here at open 9:30. We see this super clean generated liquidity to the downside, right? And keep in mind, we're still bearish at this point because we haven't shown a reversal of order flow. What do I want to see for a reversal of order flow? I want to see the fair value gaps from that previous side get invalidated with inverse fair value gaps like we see right here on this eventual move higher. I want to see things like highs not being swept, but instead being ran through, which we don't see at all until we start to run through this high, right? And this happens after open. So if we look at this point at open 9:30, what we see happen is NQ goes ahead, they both sweep this internal high right here. So we see stop rate of this level, and then from there on NQ we make a super efficient run to the downside to take out all of this liquidity. Now if you are comfortable taking the second chart, and by the way there was like 3 really nice beautiful equal lows stacked there. So if you're comfortable taking the second chart on open, which in my opinion I never think is a great idea, you could have gotten a really nice kind of 15-second or 30-second short right here. And I mean, this was the setup of the day. It was just so efficient, so great, right? So yeah, look, after this, if you wanted to take the fair value gap or inverse fair value gap, for me, this just really wasn't anything confirming this setup, so I wouldn't have taken it. But if you look, if you got the right entry and everything, this would have been a really efficient trade to the downside to go run all that generated liquidity. So that's the first setup of the day. From here on out, we're within that fair value gap, and keep in mind that bigger time frame conditions, we see all this generated liquidity. We're expecting to see this get ran, right? So keep in mind, we want to see efficient action, right? That's our whole goal as traders. We want to see efficient action. The biggest enemy, so the opposite of efficient action is inefficient action, right? Inefficient action comes from in the form of consolidation and where price moves without energy and direction, right? As traders, our enemy in the market is no direction. We don't want to see the market consolidate because no one can make money in that time unless you're doing some weird option strategy where you're betting on there being no movement in the market, right? No one makes money during that time. So our enemy as traders is when the market doesn't move. So we want to figure out first, how can we find out when the market's going to move? There's a couple different things. There's time and price, right? And the second biggest thing is there's time and price, which happens on a daily window where we see different moments of time and price aligning at open at 9:50, where we see the start of the move, at 10:50, where we see pretty much nothing today. But later in the day around PM session where we see a reversal, all this kind of stuff, market close, that's where time and price aligns on an intraday window. However, we want to see where time and price align on a weekly level. So how is that going to look? That's going to look like news. Today, if we go to that Forex Factory economic calendar, Monday has nothing. Monday, Tuesday, and I'm pretty sure even Wednesday have nothing. And Wednesday has just a small orange folder news. The days that we don't at least have a couple orange folder news or one red folder news is where the market is going to chop like this, especially on a Monday. Tomorrow is a Tuesday, and then the day after that's Wednesday, right? We can expect to see some okay action even if we don't have news because they're more into the week. And just talking on a statistical basis, the more into the middle of the week we get, Wednesday, Thursday, and Tuesday are going to be our best days to see volatile direction and movement in the market, right? Monday and Friday are just statistically not good for that, right? So as traders, we want to be aware of conditions, these bigger time frame conditions, right? So no news Monday, no news. We're at a point where we have a great price aligned. Everything looks really great to see this all get ran today, but time and price just aren't aligned. And if we let our windows where time and price are aligned, that market open session, right? Market open gives us that really clean move. And then from there, there's no trade at all. There's no internal model right here to take on a 1 minute chart. Like if we saw a sweep of this low down here, which then gives us some kind of internal model that's looking like this, where we come back down, tap, something like this, you best bet I would have taken this and then leaving this for all day long runners up to this high, because I'm so confident in that draw. But the market never gives us that opportunity, so I can't force it. It's not my job to force it. Simply watch the market, right? You see days like this where literally we just barcode. Check this out. NQ is moving back and forth. ES is literally just sitting here barcoding. Like, what is this? What am I looking at right now? There is no direction here. And there was a time, which I'll show you guys in a second, where there was a super clean short setup, but conditions override price, right? When time and price aren't aligned, there's no volatility to actually move price. So no matter how clean price looks, it's not going to move. Why do you think we don't trade Asia? Because in Asia is rare moments where time and price are aligned. You'll still see moments where price is really, really clean. But like, look, at this point, like, let's look. Right here, we had stacked highs. We saw all this stuff. We see a sweep of this level. There's a possibility that we go run all of this. So right now, that looks really clean, right? We don't do it. Why? Because we're at Asia Open, right? Like it's Friday and we're at Asia Open. What is this? Like, this is nothing for us to go ahead and trade, because at this point, time and price aren't aligned. If time and price were aligned, we would see a very efficient move to the upside here. But time and price aren't aligned, so we have to wait until New York Open, which thankfully we're not going to be checking the charts at midnight, so we don't have to worry, is time and price aligned? No, we just trade the second market opens until a moment, which is for me is 8:10 or 11:10 on these charts, where time and price go out of alignment, and from there we start to see no movement or shit movement, just chop, right? So it's up to us to be able to figure out where time and price align and then take advantage there. So days like this, conditions, time and price aren't aligned. All of this stuff is when we see no movement, and it's just times that I just literally want to step back. No matter how clean a setup looks, it's most likely not going to play out because time and price and conditions aren't all aligned. So the setup that to me looked really great today, but it simply didn't play out because, like I said, time and price weren't aligned, was right here. We see this 1 hour fair value gap, 1 hour order block, all that good stuff right here. Let's draw this in right here. Fair value gap right here. If we look, after making that SMT on the lows, right, we start to just generate liquidity down here, right? So generated liquidity, all this now becomes more generated liquidity. If we look at the same point, it's 10. So we're within 950 macro, because 950 macro goes from 950 to 10. So we're pretty much within 950 macro, just kind of starts right when we get out of the macro. But right around 10 o'clock is that point where we're primed to see reversals to go and take, because the 4 hour candle and the 1 hour candle both close at 10 o'clock. So we're able to then go ahead and look for reversals in price because of the higher time frame candle, open, high, low, close, all that stuff. You get that. There you go, right? So at that point, we have a super clean setup because On ES, we tapped in that same fair value gap, so I'm not going to go ahead and mark it. But we ended up making SMT at these highs, so I'll draw this out really fast. We see SMT from this high to this high. So marking this as SMT. This is macro time. Nothing really to mark that, right? So this is macro time. We see SMT within an area which we expect to reject. SMT doesn't matter because right here, we saw SMT, all these random SMTs in the market, right? Because we're chopping, right? The only thing that tells you if an SMT is something to care about or if it's simply just noise is if it happens in an area in which we expect to reject, or it's most likely going to be noise if we're just consolidating just by looking at the chart and we see barcode. So look, when we see that SMT at an area in which we expect to reject within that fair value gap, that tells me, okay, this is a potential great setup, right? We see price SMT reject that consequent encroachment of this bigger wick, right? Show this out to here. Right when we tap consequent encroachment, we go ahead and we reject right at that point, right? Next, we make change in the state with displacement, with a ton of displacement, right? Candle closes straight through. My entry, in my opinion, my entry right after this would have been after this first candle closes, right? That's enough displacement for me where it clearly closes through that change in the state level. So I would have got then tapped on that very next candle. So placing my order somewhere like this. Stop goes at that high, the SMT high, because that's now a protected high if this model is going to play. And then from there, we can look to target that first low down here, which gives us around a 2R. And then also, if we want to figure out the true draw on liquidity, we can pull out that standard deviation level, which right here, 1 in that level are aligned. So that to me looks pretty good. If you look, price does go ahead and tap 1. So this is actually, I mean, if you took this and you just targeted for 1, looks pretty good to me. I think this low ends up getting, yeah, right here. So this low ends up getting tapped and then price reverses. But I think this would actually not have been a bad trade at all. If you took this today, it was super inefficient. And because of that, it's not my type of trade. It's not something I'm looking to get into. But from here, if the price was efficient, price should have moved here from this low to this to this to -2 with these 2 equal lows. Actually, that's 1, 2, 3, 4, 5. Like, dude, 5 equal lows right here. And then -2.5 when we have this, and then we have 3.5, and then we have equilibrium all the way down here. If this was an efficient day, this should have played. This should have played. We have generated liquidity, we have standard deviation aligned, bigger time frame aligned, everything's aligned. This should have played if conditions and time and price were all aligned. Today, Monday, no news Monday, we see a day where time and price and conditions are not aligned at all. So we literally just have to say, this looks so good. This is like trading porn, bro. Like, this is so good. But we have to simply just have that self-discipline to know, okay, in the past 3 weeks, every no news Monday that there's been a clean setup on, the setups looked great, and then it's literally just failed. So today, instead of hopping in and saying, bro, but the setup looks great, I'm going to place my position tool right here, and I'm going to watch it and say, okay, yeah, let's use this as data collecting. This is time to collect data on if the market's going to move well or if it's not going to move well, right? So that's what I'm doing. I simply place my position and I'm like, all right, let's watch why this is a good trade. Why is it not a bad trade? We'll see how it plays out and we'll see what happens, right? So we place it and we go ahead and we get stopped out. So it tells me this most likely isn't going to be the best trade, right? This most likely isn't the best opportunity. And that's because of that no news Monday condition. So the biggest lessons from today are simply conditions. Last week, Monday, we saw literally the same barcode happen, but last week's was worse, dude. It was literally just straight barcode for the entire day. And no news Monday is going to give this to us. And I'm going to tell you guys right now, do not expect to make money this week. Do not expect to make money this week. Monday, Tuesday, Wednesday, there is literally no news. Thursday, Friday, we get a little bit of a pickup. That's when you could potentially make some great money. Thursday, Friday, when you have volatility, everything's looking great. The market's been setting up the entire week. Thursday, Friday, go ahead and run all that setup liquidity. That's when we can expect to happen, right? And now those are going to be the days we want to put on size and actually make some money. But now is a day to watch, to back test price or to forward test price action and just test ideas and grow in our own discipline and being able to watch price move and not say, dude, I'm getting in a trade right now. All that kind of stuff, right? That is the issue. We can't look at price and be like, dude, it looks so good, I have to get in, and disregard conditions, because all of us know what conditions are. We all understand this is good to trade and this is bad to trade, and we all understand that kind of stuff. But the thing is that we know it, but we don't do anything about it because we just say, oh, it's fine. It's fine. I'm just going to trade anyways. And that's the thing that we all need to work on getting rid of. So I hope you guys can learn something from this video. If there's anything you like the way I explain anything, the way I explain psychology, actual trading concepts, go ahead and just drop a comment in the description. Any questions you have, go ahead and watch my videos on market maker models, all my other trade recaps. I drop gold like this in every single one. So without further ado, I'm going to let you boys go. So peace out.